And we're going to be discussing 3 real estate investment strategies that self-directed IRA investors could benefit from. I'm just going to give you a quick heads up. As I mentioned before, if you have any questions, go ahead and type them into the box there, the questions box, and I will answer them all at the end. I'll read them and then answer them as we get to the end of it. So the first thing I need to put up here legally is that we, the Entrust Group, are not financial advisors. We do not provide any advice. So if you are looking to invest in anything that you're looking to invest in, be it real estate or anything else, we highly encourage you to discuss this with advisors, accountants, attorneys, anybody like that in your life before entering into any type of investment. Again, we provide the administrative and custodial services for self-directed IRAs. We do not give any advice on what you should or shouldn't invest in. What we're going to be talking about, we're going to go over a little bit about Entrust. What are the benefits in general of self-directed retirement accounts? What are the different real estate investment options? This is going to be a very, very real estate-focused presentation. Talking about partnering as one of the strategies, using non-recourse loans, basically leveraging your IRA to borrow money, and then investing through an LLC. And then what the process is to get started, and then at the end is when I'll answer all the questions. So again, feel free to type in your question into the box. For Entrust, we've been in business since 1981, so it's actually a little over 36 years. We currently hold a little over $3 billion in assets. And again, we provide the administrative and custodial services for what are called self-directed retirement accounts. And I'll explain what those are for anybody who might not know in a minute. The majority of our staff are certified IRA service professionals. That's what CISP stands for. We are the only company in our space that provides a national continuing education program. We have a class, a 2-hour, 2-credit class for both realtors, one for realtors and one for CPAs. We do those in person, and it's certain states. It's not every state that we have the continuing education designation. But if you're in one of the states that we have that, then we can come for realtors. We often go to realtor offices, real estate associations, maybe CPA associations, and give this class 2-hour, 2-credit class. And again, we're the only one in our company that in this space that does that. And then we have the IRA Academy, which we actually will train, we'll give a class for other companies to pass the CISP program. So we actually train our competitors on employees of our competitors what they need to know to pass the CISP. So we really are big on the education side of things. So what is a self-directed IRA? Let's talk about that first before we get talking about the benefits. Most people who have a retirement account have it with a traditional brokerage firm or a bank that limits you to only investing in stocks, bonds, and mutual funds. And with Entrust, where the IRS allows you to invest in pretty much anything you want, you just have to have your account with a custodian who will hold other assets besides stocks, bonds, and mutual funds. So that's where the self-directed industry comes in, and where Entrust comes in, is that we provide all the administrative and custodial services for the account. You make all the investment decisions, and if you want to invest in other assets, non-traditional assets other than just stocks, bonds, and mutual funds, then you can do that. You just have to have your account with a company like Entrust. So what are the benefits? You get to take control. Instead of having a broker or advisor that suggests a handful of different mutual funds and tells you you're well diversified, this gives you the ability, if you are interested in real estate, or if you know of some private company, or you have friends that you want to loan money to, or anything like that, you can do all that inside your IRA, so it gives you more control over your own investment decisions. And it allows you to diversify. Instead of having a handful of funds, you can invest in things like real estate or private equity or promissory notes or tax liens or trust deeds. Or we had somebody invest in a racehorse, in cattle, in a bowling alley. Like pretty much anything you want, you're allowed to do inside your IRA, but you just have to have your account with a custodian like Entrust who's willing to hold it. And you get the tax benefits associated with it. If you own real estate personally, each year you're going to report your income, net expenses, and have to pay taxes on that. And then whenever you sell that property, you're either going to have to 1031 exchange it, or you're going to pay capital gains tax on it. But inside an IRA, all the asset is held in and owned by the retirement account. So if you buy property inside your account and then turn around and sell it again, if you flip it or hold it long term and then eventually sell it, or all the rental income, all goes back into your retirement account. So there are no tax consequences associated with any of those transactions until you actually take a distribution from your retirement account. Then you're taxed only on the amount you take as a distribution, not on the transaction, on the sale of the asset itself. So contributions can lower your taxable income, and then the investment either grows tax deferred if it's a traditional IRA, or it's tax free if it's inside a Roth IRA. And as far as what kind of real estate can you invest in, all of it. You name it, you're allowed to do it, other than the fact that it can't be a real estate that you plan on personally living in, staying in, using as a second home, vacation home. And I think I get into a little bit more of who's disqualified from doing that. But as long as it's for investment purposes only, you can buy any type of real estate. You can buy commercial, multifamily, land offshore, you name it, you're allowed to do it inside a retirement account. Again, that's just real estate. You can invest in pretty much anything you want inside a retirement account aside from real estate, but again, this is a very real estate focused presentation. So some of the strategies that you can use whenever you want to use your IRA. So let's say you have $100,000 in your retirement account and you want to buy a property that's worth $200,000. Right? You think, well, you can't do it. Well, you can. You don't have to have all the cash inside your retirement account. There are other ways to do it. One of those is that you can partner your IRA with other investors. So the concept of partnering is simply that your IRA would be an entity that would own a certain percentage of the asset that you're purchasing, of the property that you're purchasing, and then other investors would also own a certain percentage of that property. So you can partner with anyone you want at the time of investment. So there are rules around what are called disqualified persons, that your IRA is not allowed to engage in what's called a prohibited transaction with a disqualified person. So an example would be your IRA can't buy a property from a disqualified person or sell a property to a disqualified person. But, and the disqualified persons are you as the account holder, your spouse, your ancestors, your lineal descendants, and then spouses of lineal descendants. So parents, grandparents, children, grandchildren are all considered disqualified persons. So your IRA can't buy a property from or sell a property to a disqualified person, nor can a disqualified person ever stay in the property. However, on a new investment, as long as you're investing in a property that's being bought from a non-disqualified third party, you can partner your IRA with anyone, including anybody that would typically be a disqualified person. So you could partner with yourself. You could partner with your spouse. You could partner with your spouse's IRA, with your parents' IRA, as long as it's being done at the time that you purchase the asset and on a new investment. And then once the transaction is closed, once the IRA owns that investment, now the disqualified person's rules go into effect. So if you partner with yourself on your IRA, then your IRA would own a certain percentage of the property, let's say 50%, and then you personally would own the property at 50%, which means your IRA would receive 50% of any income generated, rental income. You would receive the other 50%. As far as expenses, it's covered at the same percentages that you established the investment. So if, again, 50-50, then your IRA is responsible for 50% of the expenses, and you are responsible for 50% of the expenses. So basically, anybody who partners on a new investment, has to receive the income, the revenue that's generated by the investment at the same percentages that were established at the time of purchase, and all expenses have to be paid by each of the partners at the percentages established at the time of investment. Okay? I talked about this. I got ahead of myself with this one. So disqualified persons, you, your spouse, your ancestors, your lineal descendants, spouses of lineal descendants, and then fiduciary. So if you have a CPA or somebody like that, they would also be considered a disqualified person. Again, that means after your IRA can't buy from or sell to a disqualified person, nor once your IRA owns a property can a disqualified person ever stay in or work on the property. But you can partner on a new investment, on an initial investment with anybody, including someone who would typically be a disqualified person. Okay? So here's some examples. You can partner with other people's IRAs. You can partner with other people's non-IRAs. And you can partner with multiple different people. So partnering is a way, if you don't have 100% of the money inside your retirement account to make an investment, it's a way for you to purchase that asset by bringing in other investors, including potentially your own personal savings or a spouse or a parent or other IRAs to make that investment. Again, each of the partner would own a certain percentage of that asset. So another strategy, using non-recourse loans. Your IRA is allowed to borrow money. There are financial institutions that will loan to your IRA in order for your retirement account to then invest in that property. And by law, it has to be a non-recourse loan. And I'll get into what that is. So essentially, it allows your IRA to purchase property where you don't have enough cash, right? So again, to use the example we did before, there's property for $200,000. You have $100,000 in your retirement account. You want to buy that property. Your IRA can borrow the other $100,000. So the loan is made to your retirement account. Your retirement account buys the property. Your retirement account receives all the income, the rental income that's generated, and your retirement account pays the loan back. So the loan is made to your IRA, not to you as an individual. So for me, okay, my name is Bill Neville. If I use my IRA to buy a property, then the property is going to be bought by the Entrust Group for benefit of, or just shortened to FBO, the Entrust Group, FBO, Bill Neville, IRA number, then whatever my account number is, right? And if my account needs to borrow money to do it, the loan is made to the Entrust Group, FBO, Bill Neville, IRA number, then whatever the account number is, right? So everything is done in the name of the IRA. Title is on the property is held by the IRA. The IRA borrows the money. The IRA pays the loan back. So it's a way for you to use leverage in order to buy property inside your retirement account. But note, I said it needs to be a non-recourse loan. That means that when they drop the loan documents, whoever the lender is going to be, it has to be non-recourse, which means that the only recourse the lender has if you were to default is they can take the asset, the property itself, but they can't go after any other assets in your retirement account, and you're not allowed, and they can't go after you personally or any assets you hold personally, nor can you provide any personal guarantees on that loan, right? Again, because the loan is being made to the retirement account, not to you as an individual. You can't use any other, like your income or your personal home or anything like that can't be used as collateral, and you can't provide any personal guarantees because, again, the loan is not being made to you as an individual. So lender will loan to your IRA, not to you as an individual. The loan to value is typically a little more stringent than you typically see on a property, so expect that you're going to be looking at more like 35-40% down as opposed to 20% down. When the lender looks at the loan, doing the loan, they're not going to be looking at your personal financial situation, your personal income, your personal credit rating. They're going to be looking at the ability of the IRA to pay the loan back. So they're going to be looking at the finances of the deal. What's the value of the property, how much are you paying for it, what's the expected rent, maybe how much cash do you have in IRAs that you could potentially transfer more in to pay that loan back. But they're not typically going to look at your personal credit rating, looking at your personal income, because that doesn't really play a factor since you're not the borrower, right? And the loan payments must come from the retirement account itself. So either the IRA has to be receiving rental income to cover that, or you have the ability to make contributions to your retirement account in order to cover any loans and expenses that you have, right? They can't be paid out of your personal pocket. It all has to be paid from the retirement account. What's the pros of non-recourse loans? Allows you to get more properties, right? So again, if you have $100,000 and the property you think is a good investment is worth $200,000, it allows you to do that. It gives you the ability to buy more than one property potentially if you want to diversify into multiple properties. And then obviously you use the income generated by that property to service the debt. Some people do fix and flips, and if you get the IRA gets maybe a short-term loan to buy a property, fix it up, then turn around and flip it. And again, all that is processed through the IRA in the IRA that receives and sends the money. We do have a list of lenders that are willing to do non-recourse loans to IRAs. It's not a big list, but there are some out there that, and you're not limited just to this list. You can use anybody you want as long as the lender realizes that it has to be a non-recourse loan. They draw up the documents that way, and the loan is being made to the IRA, not to you as an individual. And cons, there is a limited number of lenders. Again, we have a list. So if anybody wants those at the end, you'll have the opportunity to request that non-recourse list. Just send that to us, and myself or somebody will forward that to you. You do typically see a higher interest rate, although I don't think it's dramatically higher. The loan-to-value requirements are a little more stringent. Again, the income must cover the debt, and if you default, then you lose the property, right? And so your IRA would lose that value. So you notice I skipped over the bullet point there for UDFI, or also called UBIT, Unrelated Business Income Tax. So I'm going to try and give a quick 1-minute explanation on how this works, and hopefully I don't confuse you too much. So I'm going to again go back to the example I used. Your IRA borrows $100,000 for a $200,000 property, right? So your IRA borrowed 50% of the money to purchase that property. The IRS perceives that 50% of that investment was using non-IRA money. It was using borrowed money. So 50% of your net income generated by that investment is going to be subject to a tax called unrelated business income tax, or the other side of the coin, it's the same thing, unrelated debt financed income tax. So in this example, let's say that net income, so after expenses, so after loan servicing the debt and after property taxes, insurance, maintenance, all that type of stuff, you end up with income of $10,000, right? Net income of $10,000. Well, at the end of the year, the IRS is going to look at that and say, well, 50% of that $10,000 was earned through borrowed money, through non-IRA money. So 50% or $5,000 of that $10,000 is subject to a tax. Now, it's taxed at trust tax rate. So there's it's a little bit different brackets tax rate than your standard income tax. But just bear in mind, whenever you're considering making an investment, if you're going to use borrowed money, and if you're calculating your return on investment, let's say your expected return on investment is 15% after expenses, you have to incorporate in that your IRA will be subject to a tax that will have to be paid, and so that might lower your return on investment from 50% or 15% to 12% or something like that, right? So it's not necessarily a reason to not do the investment. I mean, if it's gonna get you a great return on investment, just note that this tax that your IRS will have to pay will lower your return on investment, is all. And the form that gets filed to pay that unrelated business income tax is a 990T. The 990T has to be completed by you as the account holder, but you send it to us, and we cut the check from the retirement account and submit the form and send that tax to the IRS. It's got to be paid from the IRA. All right. Again, UBIT, UDFI. Most often you hear it described as UBIT, Unrelated Business Income Tax. And then the third strategy is investing in real estate through an LLC. So everything I've talked about so far assumes that the IRA is going to be the direct owner in a property. So if you buy a property, the entity that goes on title, that's buying the property, that goes on the contract and all the closing documents would be the Entrust group for benefit of your name and account number, right? And then any expenses that come in, the bill has to get sent to Entrust. We pay it from the retirement account. So we cut all the checks. Any rental income has to come to us to deposit into your retirement account, because your retirement account is the direct owner of the property. However, if you don't want to have Entrust write the checks, if you want to be able to control that flow, you can do so through an LLC. So what's called a single member LLC. So you can establish an LLC where your IRA becomes the member / owner. It's the entity that owns that LLC, is the member of that LLC, and you can be the manager of the LLC, right? So you make the decisions of what the LLC is going to invest in. You open the bank account in the name of the LLC, and then the LLC becomes the entity that buys the property. So your IRA invests in the LLC, and now the LLC invests in the property. So title is held by the LLC, but the LLC is owned by and funded by your IRA. Or if you want to do partnering, then the LLC members can be your IRA plus yourself or your IRA plus other investors, however you want it to be. But what the big advantage is this gives you checkbook control. So anytime you have a bill that needs to be paid, instead of sending that invoice to Entrust and Entrust paying it, you would pay it directly from the LLC because the LLC is the entity that owns the investment directly, right? Very handy when you're talking about partnering. Like an LLC can be very handy when you're going to be partnering, because particularly if you have a tenant that's paying rent, instead of the tenant having to make out checks to multiple different partners or individuals and IRAs that own the investment, own the property, they can just make out one check to the LLC, and then anytime a bill comes in, the LLC pays the check, right? It gives checkbook control. Okay, so you would open up a checking account in the name of the LLC. You would have to acquire your own tax ID number for the LLC. You would also have to establish an operating agreement. So you're establishing an entity. The LLC becomes a pass-through entity that allows you to have checkbook control, right? But it's still IRA money. You as the account holder of the IRA, you can be the manager of the LLC. You can't be compensated, right? You can't receive any kind of compensation for being the manager. Let me think. I'm drawing a blank on what the other couple things. The LLC has to be vested in the name of the IRA, and it has to be a manager-managed LLC. It can't be a member-managed LLC if your IRA is one of the members, because an IRA can't be a manager. It's an entity. Okay? So you would create a business account in the name of the LLC. You would open that checking account. You can be the so that's not managing member. We need to correct that. It's manager, because an IRA, so you would just be the manager of the LLC, and that gives you, once you open the bank account, that gives you checkbook control over the funds. And so now the IRA is invested in the LLC. The LLC can then turn around and invest in whatever you want to invest in. But it's incumbent upon you as the manager to make sure you don't do anything that's prohibited by the IRS. So you can't turn around and lend yourself money from the LLC, or buy your own property, or buy a property, your parents' property, right? You still have to follow the guidelines around prohibited transactions and disqualified persons. Again, and that's kind of what I was saying here. The LLC must ensure that the IRS meets all the Department of Labor tax rules and requirements and rules around prohibited transactions and disqualified persons. If you use leverage, then the IRS must still be paid the UBIT, and that's done through Form 990T. And then any revenue that's generated by the LLC, by the investment held by the LLC, if you want to take the money, so if you have your IRA that owns the LLC and you want to take money as a distribution to you personally, the money has to flow back to your IRA first, and then from the LLC to the IRA, and then from the IRA to you as an individual. And then you get taxed on at that point, unless it's a Roth, which grows tax-free. Have to set up the LLC with your IRA as the member, or at least one of the members, and again, a manager-managed LLC. And as I mentioned earlier, you can't receive any compensation. If it's your retirement account, you can't receive any kind of compensation or remuneration to be the manager of that LLC. So what are the advantages of using an LLC? It gives you checkbook control. I mean, that's the biggest advantage that you have, is that instead of having to come to Entrust anytime you need a check cut, you can do it yourself. Same thing with rental income. It's very helpful if you are going to be doing a multi-member, if you're going to have multiple people partnering into an investment. Doing it through an LLC can make that much cleaner. Like I said, instead of having a tenant having to break out multiple checks and each investor having to make out multiple checks anytime a bill needs to be paid, you can do everything through the LLC. So what are the cons? There's a cost, not to Entrust, but there are costs to establishing the LLC. Entrust does not provide that service. We don't set up the LLC for you. You have to do it yourself, or you have to pay somebody, hire somebody to do it, which is usually a lawyer. I have a couple of people that a lot of our account holders have used to set up their LLC, so I can always pass that on to people. And any record keeping, so any transactions that you do within the LLC, so if you buy a property, you need to track the rental income, and you need to track the expenses, and you need to keep records of that in the event that your LLC gets audited. We're not doing the record keeping for the LLC, or I'm sorry, for the asset owned by the LLC. We're record keeping the LLC itself, but any underlying assets that the LLC invests in, you as the manager are required to keep a good set of records on that. And then, and to mention the cost again, not only would you potentially have costs to set up the LLC, but you also, most states, if not all states, charge you an annual fee to hold an LLC. In California, it's $800 a year. So you potentially have some cost savings to what you pay to Entrust, depending upon how you're planning on transacting your account. But there also are costs that you will incur that you don't incur if you do not use the LLC. So to summarize, most of the time real estate investors are using self-directed IRAs because that's where they want to invest their money. They think that the best opportunity to grow their retirement account is through real estate. And so instead of being locked into just stocks, bonds, mutual funds, you can use your IRA to invest in other assets, real estate being a popular way to do that. And again, for strategies other than just having all the cash in your IRA and being able to use the cash to make that investment, you can also partner your IRA with other investors, including people who would normally be considered disqualified persons. Your IRA can borrow money through non-recourse loans, and then you can use an LLC, which gives you checkbook control over the money. The process is very straightforward. You open an account, which you can either do online through our portal. You fund your account, which either would be done by making an annual contribution, by transferring from an existing IRA, or by rolling over from a 401k or some other qualified plan. And then you purchase the asset, which you do by instructing us to purchase the asset on behalf of your IRA. So you find the investments you want to make, but your IRA is the entity that's making the investment, and you have to instruct us to do that. All right? Set up an account. There's the site for it. You can do it in about 10 minutes. Just go to theentrustgroup.com. You'll see a little green, I think, box at the top that says open an account. You click on that and just follow the information. It's like opening any bank account, name, address, social security number. You'll need to upload a copy of your driver's license or passport, and then credit card to pay the new account establishment fee of $50. Okay. I hope that wasn't too fast for everybody. Let me get to the questions. Let me put that up on the screen so you have my contact information if needed. All right, so I'm just going to work through these. I'll read the questions and answer the questions and work my way through until I get to the end. It's 11:30 now. Sometimes these go a while, so feel free to ask whatever you want. I'll answer them all. So first question, I have a government thrift savings plan. Can this be converted into a self-directed IRA? Yes, it absolutely can. So it would be rolled over. So what you would do is you would open an IRA with us, and then you would have to contact your thrift savings plan administrator, custodian, and tell them you want to roll over to an IRA, and then they would have a process for you to do that. I will add the one caveat. If you still work for the organization, if you still work for the government, whatever part that you have that thrift savings plan through, then there's a good chance that you will not be able to do that until you no longer work there. Okay? Anytime you work for a company that has a 401k plan or work for a thrift savings plan or a 403b or anything like that, they typically don't allow you to roll that over until you have a qualifying event. And a qualifying event is that you leave the company. That's the most common one. There's also sometimes age qualifying events. If you reach a certain age, they'll let you roll that over. But each company, each plan can be different. Some allow it, some don't. So the best thing to do is just talk to the company and see if you can roll over. Next question. My wife and I want to partner our Roth IRAs to buy real estate using IRA funds for down payment and fix-up costs, borrowing the rest of the purchase price from a non-recourse lender. What are the ramifications as to UBIT? Well, your IRA is going to be depending upon how much revenue you generate. So your net revenue on an annual basis, and by the way, the IRS gives you $1,000. It has to be over $1,000. If you net revenue in a year is under $1,000, then you're not subject to UBIT. But the ramifications are that if you make an amount of money, if you have revenue above $1,000 net, again, after expense revenue above $1,000, each of your accounts are going to be subject to UBIT depending upon, and it's going to be based on the percentage that you use to borrow. So if you borrowed 60%, then 60% of the revenue above $1,000 is subject to UBIT. If you borrowed 30%, then 30% of the revenue above $1,000 is subject to UBIT. Have a conversation with a CPA about that, though. Have an accountant and make sure you understand that. But again, non-recourse loans are generally going to subject your account to UBIT as long as your net revenue in any given year is above $1,000. By the way, as you're paying that loan back, the percentage is going to go down. Like let's say this year you have 50% leverage and next year you have 45% leverage. Well, this year it's 50% of your net revenue, but next year it's 45% of your net revenue. It's based on your outstanding loan amount, the percentage. Next question, if there is not quite enough cash in the IRA LLC to purchase property, what is the process to make up the difference with personal funds, say 80-20 split? If property is held at the time of RMD, how is ownership doled out to personal interest? So the process to make up the difference with personal funds is that you have to make a contribution to if your IRA is let's say an IRA LLC to purchase property. So depending upon what percentage of the LLC is owned by your IRA, but if you need to add more funds to that LLC, and some of that money has to come from the IRA, you have to get money into the IRA first and then transfer it from the LLC to the IRA, or I'm sorry, from the IRA to the LLC, right? So either you need to make a transfer or rollover from another IRA to your Entrust account to transfer in the LLC, or you have to make an annual contribution. And if you don't have the ability to add all the money you need to your IRA through a contribution or through a transfer or rollover to put into the LLC, then your IRA is going to need to borrow the difference to put it. But you can't just simply add money from your personal account into the LLC. Your IRA has to add the money from the IRA, and you have to get that money into the IRA one way or another, either transfer, contribution, or have the IRA borrow money. So say 80-20 split. So if your IRA owns 80% of that LLC, then your IRA has to pay 80% of the additional funds. The other 20% would come from whoever the other member is at that 20%. If property is held at the time of RMD, how is ownership doled out to personal interest? So it's a good question. So required minimum distribution, for those who don't know, at age 70.5, the IRS expects you to start taking a certain amount out of your retirement account, and it's calculated based on actuarial tables, and it's called required minimum distribution. If you don't have the cash in your retirement account to meet the RMD, and by the way, RMD is calculated by adding up all your retirement accounts, but you don't have to take it from each account. You can, like, let's say you have an account with Entrust and an account with a traditional brokerage firm like a Charles Schwab. And both the Schwab and the Entrust accounts are going into calculating your RMD, but you can take all your RMD from one account or the other. You can take it all from Schwab or you can take it all from Entrust. Now, if you have let's say your RMD is $20,000 and you're completely illiquid, you don't have any cash in any retirement accounts, then you can take a percentage of the asset held inside your retirement account as a distribution to you. So if you hold an LLC in this instance, you can distribute a percentage of that LLC to you as an individual. You'll be taxed on it, on whatever you're distributed to you, but now, and then the ownership percentage within that LLC would change from 80-20, use an example here, to let's say 75-25. Right? You'd have to change the ownership percentage to be partially for whatever amount distributed to you. That dollar amount represents a percentage of the fair market value of the asset. I hope that makes sense. Regarding a trust deed in California, can you fictionalize a SEP IRA held with Entrust and an LLC owned by me, or would they need to be separate trustees? A SEP IRA held with Entrust and an LLC owned by me. I'm not sure. I'm struggling with the term fictionalize here. Would they need to be separate trustees? So I don't know that I understand this question, Brett. I'm sorry. I want to answer it, but I don't know if I can't. You can, your LLC owned by you and a SEP IRA can be partnered together on one trust deed. If that's what you're asking, like can you combine your SEP with a LLC owned by you to make an investment? Sure. They don't necessarily need to be separate trust deeds. You can have like each your LLC and your SEP own a certain percentage of each trust deed, or you can have your SEP IRA own one trust deed and your LLC owned by you own the other trust deed. I mean, you can do it either way. But we're talking about partnering. You can partner. All right. Hey, Connor, can I lend money to a friend to renovate their house and then replace the money when it is sold? So when you say can you lend money to a friend, I'm assuming you mean can your IRA lend money to a friend to renovate their house and then replace the money when it's sold. The answer to that is yes. Your IRA can lend money to a friend for whatever the purpose they want to use. You would draw up a promissory note between your IRA and the friend and use whatever collateral you want to use, charge whatever interest you want to charge. That's between you and the friend. But the IRA would lend them the money, and then whenever they sell it, they would pay your IRA back. So yeah, you can certainly do that. What if you want to use your real estate as an Airbnb property? That's fine. You're allowed to do that. The property, again, is owned by your IRA, and your IRA receives any of the income generated by it. So you can't take personal income as from the Airbnb. So if the money is going into Airbnb, then from Airbnb it has to transfer back to your IRA. It can't transfer to you personally. Also, if your IRA owns that property, you can't do any work on the property, which means you can't go in and clean it or do any of that type of thing. You have to contract that all out. But sure, your IRA, you can Airbnb a property owned by your IRA. That's not a problem. Just make sure that you don't do anything that's disqualified, like, again, clean it yourself or take money from Airbnb to your own personal funds. It has to go back to your IRA. Does the scope of disqualified peoples extend to those of who you partner with? So that's a good question, the way you're phrasing that. So if your IRA partners with a non-disqualified person, let me think about this. So if your IRA, does that person become a disqualified person? From a standpoint of what, income? No, right? Like, I mean, if your IRA partners with, let's say, a sibling, which is not considered a disqualified person, in an LLC, that sibling is allowed to, if it's the sibling as an individual and not the sibling's IRA, then that sibling can receive like income to manage that property. So no, they don't become a disqualified person just because they partnered with your IRA. A beneficiary of your IRA, by the way, is a disqualified person. So we didn't mention that, but like, let's say you name a sibling as a beneficiary of your IRA, that makes that sibling a disqualified person. Just a little side note there. Does the homeowner's insurance policy and utilities need to put in the name of the IRA, or can they be put in the personal name so as long as the fees are paid by the IRA? No, they need to be in the name of the IRA. You need to, well, the utilities don't matter, but the homeowner's insurance absolutely has to be in the name of the IRA. The utilities can be in a personal name as long as they're paid by the IRA. How do I get out of an investment co-owned with my wife's Roth IRA? Sell it. Sell it to sell it. But you can't sell it to your wife, or you can't sell it to your wife's IRA. You got to sell it to a non-disqualified third party. To confirm, can you partner your IRA with your business LLC owned by you and your spouse to purchase a property as a fix and flip, assuming equitable shares remain the same and profit on resale split according to equitable shares? Yes. You can partner your IRA with anybody, including your own business LLC, as long as the LLC and your IRA are listed at the appropriate percentages, and that when the profit is sent to your LLC at its percentage and your IRA at its percentage. Yeah, you absolutely can do that. Do you need a partnership agreement for the partnership strategy? If so, who signs on behalf of the IRA? Entrust, who prepares the partnership agreement? Need to hire independent counsel? No, you don't have to create a partnership agreement. You can, if you feel more comfortable with that. But simply, if you're going to partner with your IRA, let's say on an LLC, in an LLC, the operating agreement for the LLC would would name the members of the, each of the members who are going to partner in that. If you're going to buy a property, then each of the partners would be listed on the purchase contract on the investment, on the asset, on the property that you're purchasing. So you don't need a separate agreement in order to do that. You can certainly do that. If you want to create a partnership agreement, that's up to you, but it doesn't. The term partnering is not a legal term. It's an industry term that means that you can combine your IRA with other investors, right? So don't get too caught up in the term partnering. It's not a legal term. If you do decide to have a partnership agreement, to answer the rest of your question, who signs on behalf of the IRA? Entrust would. Who prepares the partnership agreement? Would you need to hire independent counsel? Yes. We wouldn't set up the partnership agreement. You would either need to hire somebody or you and the partner can draw it up yourself. But it would need to be signed by Entrust on behalf of the IRA. Is there a shorter name for tenant to make rent checks payable to? I mean, yeah, you could do, you could shorten the Entrust group to TEG, TEG, FBO. I mean, we need your account. I mean, they could do TEG, FBO, your name. The account number wouldn't necessarily, if you don't want them to know your account number, we're not necessarily a stickler on that. So, yeah, there's certainly ways you can shorten that. Jerome, I'm a land specialist for PNV Enterprises. My question is, would the property be vested under the contributor's name at the time of purchase or when that person reaches 59.5 years and old? It would be vested under the investor's name, the Entrust Group, FBO, your name and account number, at the time of purchase. It's done at the time of purchase. Because we have to review and sign those documents and send the money. And one of the main things we look at is the investment documents are properly vested in the name of the IRA. What lenders allow these non-recourse loans? Mark, provide your email at the end and that you want us to send you the non-recourse lenders, and I'll send you that list. When partnering with other IRAs and personal funds, is a joint venture agreement used? Again, that's sort of the same question. It can be. You don't have to. How do I get out of a real estate investment? You already asked me this. On 95% of my wife's Roth and 5% with my Roth. She would buy me out, but we are told this is prohibited. Yeah, she can't buy you out. You would have to sell your 5% to some other non-disqualified third party. If your wife's IRA wants to turn around then buy out that non-disqualified third party, that's up to you guys, although I'd be really careful about that because that's if that got looked at by the IRS, they might have a problem with that. But in terms of your 5%, Fred, you need to sell it to somebody other than your wife or your wife's IRA or your children or any other disqualified person. It has to be sold to a non-disqualified third party. Can the lender be the seller as long as note is non-recourse? Yes. I don't know. You can do property flips with your IRAs. Isn't that considered a business? It's a good question. So what my understanding on this is if you do 5 flips in a year, then you're considered to be running a business in your IRA, and then it's subject to UBIT. So it doesn't mean that you're not allowed to do it. It just means that your IRA is going to be subject to UBIT. But doing a flip on itself, is that considered a business? No. You can do. We have a lot of people who do flips inside their IRAs. Can we use an IRA to purchase foreign real estate? Yes, you can, but I'm going to add a little caveat to that. Most countries do not allow you to purchase real estate directly in an IRA. They don't recognize retirement accounts as entities that can purchase real estate in that country. So what most countries require is that you set up some kind of local trust or local entity, the equivalent of an LLC in that country, although they use a different term for it. But you normally have to set up some kind of local entity or trust, like a bank trust, have your IRA then fund that local entity and then use that entity to invest in whatever you're going to invest in that country. Again, it works similar to an LLC, but the only difference is in the United States you don't require an LLC. You can do it directly through your IRA. In most other countries, you're going to need to set up some kind of local entity. Can the LLC own more than one piece of property, or is it one LLC for each piece of property? No. You can own as investments as many different properties inside your LLC as you want. So one of the advantages of having an LLC is if you're going to do multiple assets, it does potentially save you some money versus having multiple assets held directly inside your retirement account. So, but no, once you have the LLC established, you can use it to invest in as many different things as you want. But again, just make sure that you don't do anything that's prohibited, that you use it only for investment purposes. Can the LLC be a foreign LLC, say a Costa Rica or Panamanian LLC? Sure, I don't see why not. If I purchase a property with someone else non-IRA funds, and a loan is used to purchase the property, does my IRA have to file the 990T for UBIT, assume the loan is a recourse loan guaranteed by the other party? All right, first of all, so I think what you're saying here is if the loan only goes to the non-IRA investor. So if I purchase property with someone else, non-IRA funds, and a loan is used to purchase the property, does my IRA have to file the? So here's the thing, and what you're asking. The loan has to be made only to the, if your IRA is part of the borrower, then your IRA is going to be subject to UBIT. But if they're lending only to the other party's non-IRA, then no, your IRA is not paying the loan back, your IRA isn't using borrowed money, so your IRA is not subject to UBIT. However, note that any lender who lends to your partner, the non-IRA funds, is not allowed to use the portion of the property owned by your IRA as collateral, right? So if your IRA is owning 50% of the property and the other guys are borrowing is going to own 50%, then the lender can only use 50% of the property value as collateral to lend that other person money, right? They can't use any money that's coming from your IRA as collateral. So if you guys were to, if he was to default and they wanted to foreclose on the property, they can't foreclose on 100% of the property. They can only foreclose on the portion of the property that's owned by the partner. They can't foreclose on the percentage of the property that's owned by your IRA, which means you're going to have a difficult time finding a lender who's willing to loan based on those parameters. Can I purchase my present home using my IRA, move elsewhere, and then use it as a rental property? No. IRA is not allowed to buy from yourself. You can sell your present home to a third party and then have your IRA turn around and buy that from a non-disqualified third party. But again, I wouldn't recommend it because the IRS may have a problem with that. But technically, you could do that. From a logistical standpoint, you could process it that way. But I think that would be, if that got audited, it would be looked at as you committed a prohibited transaction, or at least you did an end around the prohibited transaction rules. Can you invest your money in a property that your CPA is also investing in through their LLC, or is that a disqualified person? So a CPA would be a disqualified person, but as long as the property, if you're partnering at the time of the investment, if you're asking, can your IRA invest in a property that your CPA already currently owns? I mean, the IRS says that a fiduciary is a disqualified person. I think by most definitions, people would consider your CPA to be a fiduciary. So my answer to that would be no if it's a property your CPA currently owns and you want to use your IRA to invest in. But if you're going to set up a new deal and your CPA is going to be one investor and your IRA is going to be an investor, then that's allowed because it's a new investment. Next question is, a disqualified person, does that mean that I can't perform any minor maintenance or repairs to the property? Yes, that's what that means. All right, so the IRS specifically says a disqualified person is not allowed to work on a property, right? Whether you choose to abide by that, like if it means going and cutting the grass or painting it or something like that, like the rules state that you can't do any work on it. That includes anything minor. So that's what the rules say. And so I'm just going to quote that. What age can you take your money out of the IRA LLC without tax consequences? There is no age you can take your money out of your IRA without tax consequences unless it's a Roth. If you're talking about a Roth IRA, a Roth grows tax-free as long as you've had a Roth for at least 5 years and you're over 59.5, so 59.5. As far as all other retirement accounts, traditional SEP, simple, 401ks, the non-Roth component of the 401ks, it's tax deferred. You're always going to pay taxes on it. But you avoid the penalty, the 10% penalty, once you reach the age 59.5. So you can avoid the penalty consequences at 59.5. You can't avoid the tax consequences. Again, unless it's a Roth, then it's 59.5 and you have to have an account for at least 5 years. Can the cost of the LLC filing be paid by the IRA? Actually, I would say the cost of the LLC filing should be paid by the IRA, not just that it can't. Why are the attorneys you mentioned who are experienced in setting up IRA LLC? I'm assuming you meant who are the attorneys you mentioned who are experienced in setting up IRA LLC. Michael, please, at comments at the end, note that you would like for me to send you the list of a couple people who have set up LLCs for our clients. for some of our account holders. If you set up an LLC for checkbook control and do business in multiple states, you have to foreign file in every state you are doing business in. That's a question for an accountant, not for me, or for an attorney. I don't know the answer to your question, Carrie. I'm sorry. You have checkbook option for a non-LLC account as well, correct? No, we do not. We don't give you checks. We don't give you checks for your IRA. If you want checkbook control, you got to do it through an LLC. In case multiple partner, next question, in case multiple partner LLC, how to pay tax on LLC profit? Can you exclude your IRA profit part, any specific forms? So your LLC, your IRA, okay, multiple partner LLC have to pay tax on LLC profit. Can you exclude your IRA? So yeah, your IRA, when you have an LLC, your IRA is considered a boy, I forget the legal term for it, but it's not an entity that has to pay tax. So so no, when the LLC doles out the profits to all the investors in the LLC, your IRA doesn't have to pay any taxes. That money just goes back into the IRA, unless they use leverage. Then your IRA may be subject to UBIT. Okay, so that's not income tax. But it might be subject to UBIT depending upon whether the LLC is leverage or not, if it borrowed money. If you have a Roth IRA account, do you still pay UDFI tax when taking a non-recourse loan? Yes. All accounts, well, you are still subject to that tax depending upon how much income, net income is generated. But yeah, the Roth IRA doesn't exclude. Again, UBIT, UDFI is not the same thing as income tax. It's unrelated business income tax, which is associated with if you're using your IRA in a way that is using leverage or your IRA is owning a business, then it's subject to UBIT. And again, it's different tax, it's different rates. It's taxed at trust rates, not at income tax rates. Can I use my C Corp instead of an LLC? Yes, you can use, it doesn't have to be an LLC, it can be a C Corp, but your IRA can't invest in your C Corp that you own personally. It would have to be a new C Corp. So if you want to set up a C Corp rather than LLC, that's fine. Can you please provide a list of vendor for loans? Yeah, Pam, same things. Note at the end, or you've got my email there. You can email me and I'll send you the list. I have multiple IRAs. Can I merge them all into this IRA? You can, unless any of them are a Roth. A Roth would have to be its own account. But every other type of IRA, traditional, SEP, simple, including 401ks, 403bs, can all be merged into one. They can all be combined into one IRA. But if you have a Roth, the Roth has to be in its own account. And just to explain that, traditional IRAs, SEP, simples, 401ks are all pre-tax contributions that grow tax deferred. Roths are post-tax contributions that grow tax free. So they have to be kept in separate accounts. I have a beneficiary IRA. It can be rolled over into a self-directed IRA. Yes, you can. So just to clarify, the term self-directed is not a type of IRA. A type of IRA is traditional, SEP, simple, Roth, 401k, and beneficiary IRAs if you're a beneficiary. The term self-directed is an industry term that means that you can take your existing retirement account and you make all your own investment decisions and you can invest in alternative assets. So any type of retirement account that you have, including a beneficiary, can be self-directed. If you have purchased, next question, if you have purchased a property through your self-directed IRA, which you will flip, and you don't have enough funds to finish the project, what options do you have to inject cash or funds into the project? You can transfer more money from another IRA or 401k if you have one. You can make an annual contribution if you still have the income and you haven't already contributed. You can make an annual contribution, or your IRA can borrow money. There are financial institutions that will lend money to your IRA. Those are your options. Those are your only options. Can I combine or you can decide, change your mind, sell the property. Can I combine a personal conventional Fannie Mae loan with self-directed IRA purchase? So this is similar to the question that I already asked before. So if you're partnering with yourself, like if you're going to borrow money from Fannie Mae, the loan's going to go to you. If you're also partnering with your IRA, that means that the IRA is a separate entity that's going to own a certain percentage of the property. So if Fannie Mae is going to loan you money, they can't loan you money based on 100% of the value of the property. They can only loan you money based on the percentage of the property that you personally are buying. They can't loan you money based on any of the percentage of the property that is being owned by your IRA, because the IRA is a separate entity from you, and you can't use the IRA as collateral to borrow money. So the chances are that Fannie Mae is not going to loan you that money when your IRA is also a partner on it, because, again, they can't use 100% of the loan as collateral to loan you the money, because you're not borrowing, you're not 100% buying the property. Your IRA is an entity that's also buying, and they can't use that as collateral. They're not allowed. I have 2 condos in my IRA. Originally, I hope those are with Entrust. Originally, they were leveraged with loans from North American Savings Bank, one of the non-recourse lenders, by the way. I can't remember why, but I had the loans paid off after about 5 years. Would you guess why? Did it have something to do with UDFI? I would imagine you paid it off because you wanted to pay it off. I mean, yeah, UDFI would be a good reason to pay it off quicker than not. I mean, I don't. You know, that's just, that was the loan agreement, I can assume. But, I mean, UDFI, not being able to avoid UBIT is a good way to pay your loan off quicker. Are there groups or persons I could invest with, like Rubicon, for example? Sure. I'm not sure of the question. You can invest with, so there are a lot of companies out there that do syndications where they will invest in, like, let's say a large apartment complex, and they will bring in, they will create this syndication and set up an LLC and then bring in multiple different investors to own 1%, 2%, 0.5%, whatever of that apartment complex. And it's usually done through an LLC. Those are a lot of our referral partners. I mean, we get accounts from people who, like Rubicon is one, who they have those type of arrangements, and they will then, somebody will want to do it with their IRA, and Rubicon will say, well, call Bill Neville at the Entrust Group, and he can help you do that. It's great business for us, and a lot of our clients, so over 50% of our clients are invested through syndications. But it's up to you really to find that syndication. Now, we do have something that we're going to be releasing pretty soon, which is a marketplace of investment opportunities that are going to be available to our existing account holders, where if you are looking for new investments, there's going to be a marketplace of referral partners that you can potentially invest in. We don't have that marketplace up yet, but it's going to be relatively soon. Until then, I mean, it's just a matter of you finding a syndication company that you want to invest through, but you absolutely are allowed to do that. Can an inherited IRA be rolled over for a self-directed IRA? Again, an inherited IRA can be self-directed, yes. So you would still have an inherited or beneficiary IRA with us. It would just be, with us, you can self-direct it into non-traditional assets. Can I move funds from an existing IRA? I'm not sure, Greg, if you didn't finish your question, but yes, that's most of the time how people fund their accounts with us, is they either transfer from an existing IRA or they roll it over from a 401k. Can you use a Roth IRA to buy real estate? Yeah, absolutely. You can self-direct any type of retirement account into real estate that you want, including a Roth. Is money invested into Entrust IRA via a real estate agency safe if the real estate agency goes bankrupt or otherwise defunct? Into Entrust IRA via a real estate. I'm not sure. I don't know what a real estate agency is. Sorry, you're gonna have to clear that up, because I don't know what you mean by a real estate agency. Does Entrust hold stock certificates from non-public companies that are owned by the IRA? Yes, we do. We are the ones who, your IRA is the entity that owns the investment in that company, and so the stock certificates need to be vested in the name of your IRA, the Entrust Group, FBO, your name and account number, and we hold possession of those in a vault. But you can have a copy of it. Can you go over partnering with your own IRA again? I mean, it's really very straightforward. You can partner your IRA with anybody else you want, as long as it's on a new investment. You can partner with any non-disqualified third party at any time, right? So let's say you own 100% of your IRA owns 100% of the property, and you decide you want to sell your brother 50% of the property. That's allowed, because your brother's not a disqualified person. So your brother could buy out 50% of your property. But if your IRA owns 100% of the property and you want to own 50% of it personally, you're not allowed, because your IRA already owns that property and you're a disqualified person. However, if it's a new property and you want to partner with your IRA where you own 50% and your IRA owns 50%, you can do that as long as it's at the time of investment. Okay? If that didn't answer your question, I would suggest, again, there's my email and phone number. Give me a call and we can talk about it some more. Does Entrust provide guidance on how to set up the IRA LLC via training or recommend some sources who can assist? Again, I have a couple of names of people who can set up IRAs for you. I have an FAQ document, a frequently asked questions document that we put together because we got questions about doing LLCs in an IRA. I could send that to you. I think we have articles on our website. So, I mean, I don't know that I have training per se, but I certainly have a lot of collateral, and then I can have a conversation with you to clarify any things that you don't understand. And again, yes, I do have a couple of names of people who, again, a lot of our account holders have used to set up through them. It's not somebody that like we do business with per se. It's just that clients have used them and seem to be happy with them. So when anybody asks me, I pass out their names because I know that they do it. But it doesn't have to be them. It can be anybody you want to use. Could you review the LLC self-directed IRA relationship again? What owns what? The IRA owns the LLC. The LLC can be managed by you as the account holder. The LLC becomes the entity that owns whatever investment that you make. So IRA becomes the member of the LLC. The LLC owns the investment. It's a pass-through entity for investment purposes. It gives you checkbook control. Again, I mean, if you want to talk about this some more, if it's not really clear, please don't hesitate to email or call me and we can talk about it some more. Does any income come to you at all before you pay up the loan? The income has to go back to the IRA. Like if your IRA owns the property, the money has to go back to the IRA. Once it's in the IRA, you can take income out of the IRA if you want. You can pay the loan. You can take it as a distribution too. Whatever you want to do is up to you. But the money has to flow into your IRA first before you take it as income. Is there a minimum amount of money that needs to stay in Entrust IRA account, or can we use all the money in the IRA? No, we don't. We have no minimum. You can use 100% of the cash to make the investment. Excuse me. We are 64 and interested in buying with an IRA LLC a tree farm with timber, which will not be ready to be cut for 12 years. How do we distribute the title to the land over a period of years? Should we set up a DBA company and let the DBA company purchase the property? Could the LLC own all shares of the DBA company and then at the time of mandatory distributions, distribute those shares to the account owner over a period of years? So you're asking me for advice, and we don't give advice. You could do what you wanted to say. I mean, you have kind of options. I mean, how do you distribute the title to the land over a period of years? If you do it through an LLC, you wouldn't be distributing title to the land. You would be distributing ownership of the LLC, right? So if the LLC is owning 100% of the title of the land, then you wouldn't be distributing the land. You would be distributing the LLC ownership. So if your IRA owns 100% of that LLC, and the LLC owns the tree farm, and you decide that you need to take a distribution because of requirement of distributions, then you would distribute 10% of that LLC to you as an individual, or 5% or whatever the percentage is, right? So you distribute until you own 100% of the LLC. And then at that point, if you want to take the money from disband the LLC and take personal ownership of that tree farm, you could do that, okay? I hope that clears it up again. Hold on one sec. My headset's dying. I've been on so long. All right. Next question. And George Ellen, call or email me if you want to talk about that some more. In the case of partnering my IRA with other people or their IRAs through an LLC, does my IRA own a percentage membership of the LLC rather than the property itself? Yes. That is exactly correct. If you're doing it through an LLC, your IRA owns percentage ownership of the LLC. If it owns property itself, it would be on title on the property, and that's if you wanted to hold title on the property directly, you can. But your question is, if in case of partnering with others through an LLC, then your IRA owns a percentage of the LLC. How is the membership shares issued? IRA, the Entrust Group FBO, ... Yes, that's exactly how it is. The Entrust Group FBO, your name, and your Entrust account number. So the Entrust Group FBO name, IRA number, and then 72300, whatever your account number ends up being. The annual fair market value of the real estate that is purchased determines the value of the IRA and determines service fees. Well, possibly. Do the property's annual expenses get deducted from the fair market value to determine the actual value, or is it the stated fair market value the only value used? I use the FMV from my tax statement. The fair market value of the property does not expenses are not deducted, but if you're using, so just to clarify, we have a fee option of both a flat per asset fee or a fee based on the value of the account. So you're saying the annual fair market value of the real estate that is purchased determines the value of the IRA. Yes, that's true. And also any cash held inside the IRA also determines the value of the IRA. And that determines the service fees. Well, it might not determine the service fees if you choose our flat per asset fee, right? But in terms of calculating the fees based on the value of the account, it's going to be the fair market value of your property plus any income held inside, or plus any cash held inside the account. Next question, if I set up an IRA LLC and purchase a property using the LLC, am I still prevented from doing any work on the property myself as a disqualified activity? Yes, you are still considered a disqualified person, even if you use the LLC as a pass-through entity. Next question, if I want to establish a self-directed IRA to flip houses, do I use the IRA credit card or use my personal credit card and pay the personal credit card with IRA checkbook? All right, so Ken, we don't give you a credit card for your IRA, so there is no such thing as an IRA credit card. If you want to do it through an LLC, and then you can get your own credit card for the LLC and do everything through the LLC. But if the IRA is the direct owner of the property and you're doing everything directly through the IRA, you can't use your personal credit card. You have to submit the invoice to us, and we pay it from the account. But if you're using an LLC, then get a credit card for the LLC and use the LLC credit card. Don't ever use your personal credit card. That's a prohibited transaction, and if you do that, you're risking your IRA of becoming considered disqualified. And what happens when it's disqualified? It gets distributed to you, plus penalties and all that stuff. Can I form an LLC owned by my wife and I, Roth IRA? We already own some properties in my wife and Roth IRA with Entrust. They are owned 50-50 and 60-40. Is that a problem since different percentages? Also, can I buy property, can purchase 80-20, 80% with IRA, and be the lender for 20%? Wow, there's a lot to digest there. So if you want to establish an LLC and move the properties that are already held inside your Entrust IRA into that LLC, then the one that's on 50-50 and the other that's on 60-40, you would have to pick one or the other because they're at different percentages. You wouldn't be able to move them both in because you have to establish the LLC percentages up front, which would either be 50-50 or 60-40, and then you would have to pick the property, move the property in that is consistent with the percentage that you established of the LLC. Can you buy property? Also, can I buy property, purchase 80-20, 80% with IRA, and be the lender for the 20%? Well, it depends upon who you're lending to. So the answer to that is potentially yes, potentially no. It depends upon who you're going to be the lender for on the other 20%. Can you explain how the loan against the IRA works? It's not a loan against the IRA. It's the IRA borrowing the money. So you're not using the IRA. So when I hear loan against the IRA, I think that you're saying the IRA is going to be collateral in order for you to borrow money. That's what against. But the IRA is going to borrow the money. So simply your IRA would apply for a loan, and the loan would be made to your IRA, and then the IRA would pay the loan back. Your IRA would be the entity that's borrowing the money. Can I lend my personal cash in my own LLC and use my self-directed IRA on same promissory note to investor to rehab and flip property? Yes. As long as you establish that loan, that promissory note, the loan you establish those partnering your personal IRA and your LLC and your self-directed IRA. You have to establish that partnership at the time that you do the loan, right? If you already have a loan outstanding and you want to add your IRA to it, then no, you can't do that. But if you're creating a new loan and your LLC is going that you have personal cash in, and your IRA going to partner on that loan, you can do that. Just on the note, on the promissory note, it's going to list your LLC as a lender at whatever percent, and your IRA is a lender at whatever percent, and then the borrower has to pay back your LLC and your IRA at those, consistent with those percentages you established. If doing checkbook control, how do you handle federal FDIC limits at the bank where funds are held? Once you do the LLC, if you're above the FDIC $250,000, then you could open checking accounts at different banks in order to stay under that. I mean, once you establish the LLC and we fund that LLC through whatever bank that you do, we don't handle the cash. You're handling it through the LLC. So you decide what bank, and if you have more than $250,000 at one bank and you want to open a second account at a different bank, that's your decision. That's up to you as the manager of the LLC. We have no involvement in that. If I use IRA funds to purchase farm ground, would I and disqualified persons be prohibited from all activities on that land, such as camping and or fishing in pond located on the property? You know, that's a really great question, and I'm going to answer it with the interpretation. Our interpretation of the IRS rules would state that yes, you're prohibited from doing that. Because the IRS says that if your IRA buys an investment, buys property or land as an investment, you're disqualified from ever like using it or working on it, staying in it or working on it. So from that standpoint, going by the letter of the law of the IRS rules, I would say that it says that no, you can't do that. Now, that being said, the Department of Labor offers a free advisory opinion that you could reach out to them and ask them that question, and if they put it in writing and says, no, you're fine, you can do that, then you'd be free to do that. So if that's something that's important to you and you want to find that out, just get an advisory opinion from the Department of Labor. Next question, I understood from another source you described don't have cash for RMD. Can you use the property on a prorated basis? Can you use the property? I mean, you can. Yeah, if you don't have cash for RMD, you can have the property distributed to you as a percentage of whatever you need to have distributed to you. So again, if your required minimum distribution is a dollar amount that represents, let's say, 5% of the fair market value of your property, then you can have 5% of the property distributed to you, which means you'd have to do a quitclaim deed and have it changed so that your IRA owns 95%, you own 5%, et cetera, et cetera. But I mean, in short, yes, you can have a prorated portion of an asset distributed to you if you don't have the cash to take a required minimum distribution. And by the way, it doesn't have to be a required minimum distribution. You can take a percentage of the property as a distribution anytime you want. You can take 100% of the property as a distribution anytime you want. Just be aware of if you're under 59.5, that just be aware of the tax rules associated with it. Next question, can my Roth, my wife's Roth, and my wife's traditional IRA all partner through LLC? Yes, or UDI deeds. I'm not sure what a UDI deed is, but yes, you can partner all those. Again, it's got to be on the new invent. You have to do it at the time that you establish that asset. Can we enter the property to inspect it? Yes. You're not prevented from ever going to, like if you have a property, you can decide who's going to rent it, and you can be there to show tenants, and you can be there to meet with contractors who are going to do work and like all that stuff. It's not like you can't walk in the door, but you just can't do any physical labor on it. Which comes back to the question of can you like fish on it and stuff like that? Again, I come back to that's a good question. I mean, my letter of the law would say that no, you can't. But I mean, the rules say that you can't work on it and you can't stay in it. And I kind of like using it to maybe hunt or fish or something like that. I don't know. Honestly, I go back to that question. It's a good one. I would say again, I lean towards the conservatism as far as that is concerned, and say no, don't do it. But the maybe talk to a CPA about that and have them work out, look at Section 4975 of the Internal Revenue Code and see what they have to say about it. Can a self-directed IRA invest in intellectual property, i.e., royalty from published book deal? Yeah, absolutely. That's a anything that as long as it's for investment purposes, right, and as long as it's not your own intellectual property, right, it can't be self-dealing. But royalty from a published book deal, as long as, again, it's not a disqualified person's published book deal. Can you personally work on the property owned by the IRA if you do not get any payment for the work? No, you're not allowed to do it. It's considered a contribution to the IRA. Doing work is considered a non-cash contribution to the IRA, and any contribution to an IRA must be in cash. So the answer to that, Jim, is no. Are your real estate Con Ed classes mentioned at the beginning offered in Michigan, the CE class? Yeah, send me an email on that, and I'll get back to you on that. I'm not sure if we offer it in Michigan. Although, depending upon if you have enough people, we could potentially sign up for it. Like I don't think it's an overwhelming thing for us to get the get passed to be able to do that, but our marketing manager will make that call. I'm not sure if that's one of the states or not. Can you collect salary as the manager of the LLC owned by the IRA? Absolutely not. Not if it's your IRA, right? If it's someone else's IRA, then I mean it doesn't prohibit anybody from taking a salary. It only prohibits a disqualified person, such as the account holder, from taking a salary. Is there a maximum annual dollar amount one can contribute to their IRA? Yeah, for sure. $5,500 to a traditional or Roth, unless you're 50 or older, then you get additional $1,000. If it's a SEP, you can do 25% of income up to $55,000. Same with 401k. Yeah, there for sure is a maximum dollar amount you can contribute. It's based on type of account and income. If property is held by LLC owned by my IRA, and I'm manager of the LLC, am I disqualified from doing work on the property? Yes. It's held owned by, yeah, because your IRA is the owner of the property through the LLC, so no, you can't do any work. If my self-directed IRA purchases a home that is already rented by a tenant with a verifiable rental income and wants to sell it back on a lease option to this tenant with payments going to self-directed, is that acceptable? Sure. Yeah, absolutely. How would the agreement be structured, and how would the tenant pay the rent, assuming I personally can't touch it? I understand rent would be payable to Entrust or the LLC. How are payments physically made, and can all this be done? So yeah, all that can be done. How it would be structured is up to you and the tenant, how you want to structure it. It just has to be in the name of the IRA, and all the payments have to either go directly to the IRA, or if you're using an LLC, it has to go to the LLC. I mean, all the other details associated with that, that's up to you and the tenant. We don't mandate any particular structure associated with it, other than it be correctly vested in the name of the IRA. And if you have an LLC, then you don't even have to involve Entrust. It's all done between the LLC and the tenant. Next question, can your LLC for checkbook control use your personal address for the state filing of LLC and not have to pay for a separate business address for LLC setup? Getting at if using personal address would break disqualified rules. I don't think it breaks disqualified rules, but honestly, I've never set up an LLC, and I don't know all the ins and outs specifically as far as that type of question. That would be a question you would need to ask some legal representative who would actually set up the LLC. Again, I have a couple of names of people that have set up LLCs for our clients. That would be a question to ask them. So if you want those names, then let us know and we'll send that to you, and I would suggest you ask them that question. Next one, my IRA invested in an LLC created by myself. The LLC can give a loan to okay, let me start over again. My IRA invests in an LLC created by myself. The LLC can give a loan to a friend to buy a home. Can the LLC finance a home for my daughter considering his business arrangement? No, not for your daughter. Your daughter is a disqualified person. If I have a multi-member LLC and each member is in self-directed IRA, one traditional and one Roth, can I convert a percentage each year from traditional or Roth, then take ownership of the LLC as a distribution once the Roth owns 100% of the LLC? You absolutely can do that, for sure, assuming the Roth IRA owner is at least 59.5 years old. Yes. So just to clarify for anybody who's paying attention to that, what he wants to do is gradually move his asset from being held by his traditional IRA into his Roth, which goes from a pre-tax account to a post-tax account, and it's also tax-free when you take it as a distribution once you're over 59.5. Each year that you convert a certain percentage, a certain value, you're going to pay taxes on the percentage that you convert, on the dollar amount that you convert each year. But yes, eventually you can do 10% a year for 5 years or whatever if you own 50%, and then your Roth owns 100% of the IRA. You absolutely can do that. Does Entrust currently provide services to cannabis-related businesses? We will, if you want to invest in a cannabis-related business within your IRA, we will provide the administrative and custodial services for that, yes, if that's what you're asking. But do we provide services to cannabis-related businesses? I mean, that's the way you're phrasing that, but we will allow account holders to invest in cannabis-related businesses if they want. Excuse me. When funding a new LLC to start investing in real estate, do the members, IRA or otherwise, put their money into the LLC checking account before the first property is located and purchased? I mean, you don't have to. There's a lot of reasons to do it that way, but you're not required to. Next question, to establish a checkbook IRA, must a new LLC be created or can an existing LLC be converted to for this purpose? It depends, right? So an existing LLC can potentially be used for that purpose as long as the owners, the members of the existing LLC aren't disqualified persons to that IRA. So no, you don't have to. It depends upon who's going to be the members, and if the current LLC is owned by a disqualified person that you want to bring in an IRA, or if an IRA of a disqualified person wants to bring in their own funding, then you're prohibited from doing that. You'd have to create a new LLC. But if you don't have a disqualified person as a current member, then you can use an existing LLC. Are there any concerns with having an IRA purchase raw land with no access roads? That's an investor decision. I mean, you would have your reasons for having concerns about that. We don't get into that level of detail. We provide the administrative and custodial services for the account. If you want to purchase raw land that has no access roads, we'll process the investment. If we don't get into the pros and cons of whether something's a good investment or not. That's up to you. You have to do your own due diligence. So, yeah. Next question. Last year, I did a couple of rollover traditional IRA from Schwab to self-directed IRA accounts. Schwab wired funds directly to IRA Trust Company. Boo. I understand there's a rule of one rollover per 12 months, but was told if I took control of the funds then rolled, did I violate this rule? So there's you're only allowed to do one IRA to IRA rollover a year. If you're moving money from a 401k or other qualified plan to an IRA, that has to be done as a rollover, and there's no restrictions on that. So let me go look at this again. Schwab wired funds directly, and IRA to IRA transfers are unlimited. So just because Schwab wired funds directly to IRA Trust Company, it depends upon how the paperwork was submitted. I mean, they could have wired the money directly to IRA Trust and it been a transfer, or they could have wired it directly and it been a rollover. So it depends upon how the paperwork was submitted. I understand there's a rule of one rollover for 12 months, but was told if I took control of the funds, then rolled over. Did I violate this rule? Yeah, if you took again, it depends upon how you submit the paperwork. If you filled out an IRA Trust transfer form, and IRA Trust signed it and forwarded it to Schwab, then that was a transfer and you're good. If you completed a distribution form for Schwab and Schwab sent the money to IRA Trust, then that's a rollover. And if you did a second rollover within 12 months, then yes, you violated the rule. If my LLC partners with myself to purchase new investment, am I allowed to personally work on the property? No, you're not. Your IRA is an investor. That makes you a disqualified person. Are trust tax rates typically higher than individual rates? So I don't know what the trust tax, if they changed the trust tax rate in 2018. It's not so much that they're higher, they're different. You can find those fairly easily. Just Google trust tax rates, and the way it's calculated is they'll say, like, you pay, I think it starts off at 12% or 15% up to up to a certain dollar amount, like $2,400. Then after $2,400, it's like $360 plus like 18% up to $6,000. I can't remember the exact tables, but there's trust tax tables. Can an S Corp shareholder start contributing self-directed IRA going forward? Can S Corp shareholders start contributing? As long as you have earned income, you can contribute to a self-directed IRA. I don't know what the S Corp portion of it. It has to be earned income, and it has to be active income. It can't be passive income. So if the S Corp shareholder is getting passive income, he can't use that as the income that's being used to make contributions. It has to be from work. You have to be W-9 or W-2 or something like that. If I use my IRA for flipping houses, then my short-term capital gains will become deferred regular income tax rate, right? No. If you use your IRA to flip houses, there is no capital gains. And, well, okay, will become deferred regular income tax rate, right? So yes, if you're flipping houses and then any revenue that's generated by the flip goes back into your retirement account. And then when you take a distribution from your retirement account, your income tax rates, depending upon what bracket you fall in and what year you take that out, wherever tax rates are at that time. So I guess technically you're right about what you're saying. it becomes income tax at the time that you take it as a distribution. But you're only if you made $100,000 on a property, you're not taxed on $100,000. You're taxed on whatever you take out that year. So if you make $100,000 and only take out $10,000, you're taxed on the $10,000 that year. And then the next year you take out another 10, you're taxed on the 10 at there. All you did was grew your retirement account. It's just another way to grow your retirement account. Can we do IRA to Roth conversions through Entrust? Yeah. Traditional IRA to Roth conversions, absolutely. You just have to have both accounts with us. You have to have a traditional and a Roth. Like if you're going to do conversions, you have to have both accounts with the same company. But sure, people do conversions with us all the time. If I roll over my current IRA to Entrust Group self-directed, will Entrust Group charge any commission on the total funds I'm transferring or any fee? So no, we don't charge a commission. There's no fee to transfer. Our fee is a transaction fee when you instruct us to make the investment, and then we have an annual fee that's either based on a percentage of the value account or it's a flat per asset fee. Our fees are on our website, or email me if you want our fee schedule. Does TG need to hold the LLC membership certificate? So an LLC, I don't know if there's usually a membership certificate. It's usually just an operating agreement, and we do keep a copy of it. We have to sign off on and keep a copy of the operating agreement. If there is a membership certificate, I mean, we should hold it. If you wanted to keep it, I don't know that there would be a big problem with that. But the IRA would be the member, so we at least need to have a copy of it. I've just never heard of a membership certificate for an LLC. In a regular self-directed IRA, I'm going to change that to traditional self-directed IRA. Can you convert your IRA to a Roth? Yes, you can. Self-directed IRA, absolutely. Will you have difficulty financing real estate within an IRA that is in an LLC? I don't financing real estate. Again, it has to be non-recourse. I mean, that's the big issue, is that it's got to be a non-recourse loan. So you're kind of limited in the number of lenders who are willing to do that. But we do have a list of those lenders, and people do it. So in terms of like if it wasn't an IRA-owned LLC, then that would probably be easier because they don't restrict it to just non-recourse. But in this case, it would need to be non-recourse. The LLC is a way to protect against lawsuits. If a renter falls and sues the IRA, do they still have access to all my other property? If so, I assume I need to have an LLC. Please clarify. Dean, that's a conversation I have with the lawyer. I'm sorry. My understanding is if a renter falls and sues, I don't think they have access to all the other property. And limited liability companies there's limited liability, so it's the argument that could be made. I've had conversations with lawyers who both said that the LLC is good to have from a liability. I've had other people say that you get all the same liability protection from an IRA. You don't need the LLC. But in terms of protection and what you want and pros and cons, you would need to talk with a legal advisor about that. All Roth income can be paid to me anytime as long as I'm 59.5 and obviously not taxable since Roth IRA, correct? I understand all funds need to go to Entrust first. So yeah, that is correct. As long as you had a Roth for at least 5 years and you're over 59.5, it becomes non-taxable. But yes, the investment income has to go back to the IRA first and then generated from the IRA to you, because we have to report that to the IRS. And then even though you don't have to pay taxes on it, we still have to report it. I also have an LLC in Hawaii that is not active. Would like to have the LLC owned by Roth IRA in California. All properties are in California. Yeah, I mean, that's a problem. You already own the LLC. So your IRA can't invest in an LLC that you already personally own. If there's a way for you to go back to Hawaii and change the ownership or membership of that LLC to be the Roth rather than you, then you could go ahead and do that. But you'd have to change ownership of the LLC, and you'd have to do that through the state. I also was curious if money from Roth IRA purchased a property and ultimately move in the property. Again, this is Roth IRA, and both my wife and I are 59.5 and older. Actually, both just turned. Thanks. Okay. So yeah, moving into a property that's owned by your IRA is, for all intents and purposes, take a distribution. But my suggestion would be, if you want to do that, then just request that we're going to distribute the property to you and then move in at that point. I mean, if it's in a Roth, that becomes tax-free. Again, John, you have to have a Roth for at least 5 years. So I hope you've had your Roth for at least 5 years, because it's not just 59.5, it's also 5 years. Will Entrust issue me checks so that I can make property expense payments with them? No. If you want, we can send the checks to you, but they have to be made out to Like, we're not going to give you blank checks if that's your question. Either we cut the checks or made out to whoever you're sending the checks to, and we can send the checks to you, but they have to be made out to whoever you're paying to. Or you can do an LLC and have your own checkbook control. Still not clear. I will send you an email. Okay. Can I buy property? Can I buy property and purchase 80-20, 80% with Roth IRA and be the lender for the 20% personally? We talked about this. Basically, my goal is to use the 80% cash flow to pay off the 20% loan to basically gain 100%. Again, it depends upon who that 20% is being loaned to. When you say be the lender for 20% personally, you can't personally loan your IRA money. If that's your question is, can your IRA purchase 80% and you loan your IRA the other 20%? The answer to that is no. Your IRA has to borrow from a non-disqualified third party. We are considering a condo in Costa Rica which will be managed by the condo itself, totally hands-off by me. I know I cannot stay in the property myself. Can I rent a condo in the same building for a vacation? Also assuming that the rental will be less as an owner in the building. Yeah, I think so. That's a good question. I mean, I guess the only issue that potentially could rise up with that is if, like, part of your with a condo, part of the ownership is like shared community whatever, right? And so is that committing a disqualified person? But I think when it comes to condos, I mean, your individual condo is a separate and distinct, your IRA's individual condo is a separate and distinct property, and your individual condo is a separate and distinct property. So, but you know, you said assuming that rental will be less as an owner in the building, your IRA is the owner, not you as an individual. So just be clear on that. But yeah, I don't see any reason why you can't have an IRA own a condo and then you rent a different condo in the same building. If you partner with yourself, say 50-50 on a vacation rental Airbnb property, can you occasionally stay there yourself? No, sorry. If your IRA owns any percentage of the property, you can't stay in there at all. I laugh because I get that just sort of a form of that question so often. People just want to find ways they can stay in a property owned by their IRA, and you're just not allowed. If you have a Roth IRA and your personal income next year exceeds the income limit, do you have to create a new traditional IRA and roll over the Roth IRA into the new IRA? And your personal income next year exceeds the income limit. So personal income exceeding the income limit just means you can't make a contribution. It doesn't mean that you can't have a Roth. Do you have to create a new traditional IRA and roll over the Roth IRA into the new IRA? So, I mean, if you wanted to, you can't, again, just because your income limit exceeds a certain dollar amount doesn't mean you can't have a Roth IRA with investments in it. It just means you can't make a contribution, a direct contribution into the Roth in order to, for that year, because your income limit exceeds what's allowable. However, I encourage you to Google backdoor Roth to figure out how to make a contribution into a Roth even though you exceed the contribution limit. Again, backdoor Roth, Google it. Can a general partnership be used in place of an LLC? Yeah, sure. It doesn't have to be an LLC, it just typically is an LLC. I don't know all the legalities of what's the difference between a general partnership versus an LLC in terms of why most of the times it's an LLC, but yeah, your IRA can invest in a general partnership. Just you as a general again, you can't receive, if your IRA is an investor in that general partnership, you can't, it affects your ability to receive income personally through that GP, through the partnership, right? Like if it's just an investor and you're just an investor using your IRA and you're not receiving any kind of personal benefit or personal income, you should be good to go. But if you want to receive a personal, and if you want to be paid income to be for that general partnership that your IRA is invested in, then that becomes a problem. What about the operators of CRBs, cannabis-related businesses? Can they provide retirement benefits for their employees? Sure. I don't see why not. I mean, you're getting into like something that's probably more legal stuff in terms of whether cannabis-related business can do certain things. If it's legal, then we'll hold it, right? We'll do it inside a retirement account. So I don't see why cannabis-related businesses wouldn't be able to, other than the fact that sort of the law associated with cannabis is still kind of iffy. Does the Entrust IRA provide lawsuit protection to the rest of the IRA assets? An Entrust IRA provides all the same lawsuit protection as any other IRA with any other company would. Now, specifically what all those protections are, I don't have the expertise on that. That would be a conversation I have with a legal expert. When purchasing, we have 3 more questions. When purchasing real estate with a self-directed IRA managed by Entrust, Entrust requires an appraisal. Not necessarily true. Is this a full-blown appraisal by a certified appraiser, or can it be market evaluation done by a realtor? So when purchasing real estate with a self-directed IRA, and again, all the closing documents that need to come in are the standard closing documents for any real estate purchase. So I don't work part of our real estate group, so in terms of specifically all the documents that they require, but usually when you get appraisal, it's to update the fair market value of the property. So this isn't necessarily when purchasing, but this is when you need to update the fair market value. To update a fair market value of your property, it can be done by a realtor. We don't need an appraisal. However, if you want to distribute the property to you or something like that, then we need an actual appraisal. Or if you want to convert it from a traditional to a Roth, we need an appraisal. But just to update the fair market value, we don't need a full-on appraisal. It can be a comps run by a realtor. Next question, in the multi-member IRA LLC scenario where I convert from traditional to Roth, do I need to rewrite the articles of organization each time the ownership percentage changes? You wouldn't necessarily need to rewrite the whole thing. You would need to amend them. So like add some kind of amendment. And I don't know if the articles of organization so much as the operating agreement. But yeah, you would need to amend that to reflect the new percentage ownership of the LLC. My real estate, next question, my real estate is paid off. Can I use the assets to purchase another real estate through the IRA, through the LLC? Can I use the assets to purchase another real estate through the IRA, through the LLC? When you say I, can I assume you mean your IRA and not you as an individual? When using your IRA to buy a property, if you're going to be borrowing money, again, the rules state that the only collateral that's allowed to be used is the property itself. Now, can you use other properties held inside your IRA to use as collateral to borrow money on a different property? I actually don't know the answer to that question. That would be a question that you would probably want to ask to the lenders. And again, we have a list of non-recourse lenders. I would suggest you, if you want that, I can send it to you and you talk to them as far as like how you can borrow money using other properties. But they have to be properties owned by your IRA if you're then going, or the LLC owned by your IRA to then use as collateral. I hope that answered your question. I'm sorry. What do we need to do to get the free report? I need to go soon. It's going to be sent to you automatically. Can the IRA originate with Entrust, or does it need to be rolled over from a different source? It can originate with Entrust. It doesn't have to be rolled over. That's just one way to fund your account. And with that being said, that's the last question. Thank you all for everybody who hung out for the full 1 hour and 40 minutes. I appreciate your time and attending. And again, there's my contact information. If you have any further questions, please don't hesitate to reach out to me. And thank you again. Bye.